Welcome to Breaking News to Trading Moves. Today, we're zeroing in on the Palantir Q3 2025 report. We'll look at the headline facts and then map out the winners and losers in the tech market based on those results. Palantir, that's ticker PLTR, they announced numbers that certainly got a lot of attention. It's more than just their quarter, though. Their performance is sort of acting as a gauge for how enterprises are really spending on AI adoption.
Exactly. Let's start with the core numbers from the report. Q3 metrics were, well, very strong. Total revenue hit $1.181 billion. That's a 63% jump compared to last year.
63%, wow.
Yeah. And adjusted earnings per share, the EPS, came in at $0.21, which beat what analysts were expecting.
Impressive top and bottom line, absolutely. But, digging into the segments, there's one number that just seems different, that U.S. commercial revenue.
Oh, absolutely. That segment is really the core story here. U.S. commercial revenue grew 121% year over year. It hit $397 million.
121%.
When you see growth like that, especially there, it tells you something important. It says the talk around AI is now actual spending. Deployed spending inside major U.S. companies.
So it's beyond just pilots or tests.
Right. This looks like production scale.
And it seems like management expects this to continue. They raised their full-year revenue guidance, now looking at roughly $4.396 billion to $4.40 billion.
They did. And not just that, their Q4 sales forecast is also looking solid, somewhere between $1.327 billion and $1.331 billion. What really struck me was the language they used. They talked about seeing otherworldly AI demand.
Otherworldly, that's a strong choice of words.
It is. They pointed to the adoption of Palantir's AI platform, AIP specifically, across both U.S. commercial clients and government customers too.
Well, maybe otherworldly isn't too far off when you see 121% growth in commercial contracts. Something seems to be clicking there. Let's pause on that platform, AIP. For you listening, maybe you haven't followed Palantir super closely. What does AIP actually do? Why is it getting adopted so quickly?
Good question, because it really frames the whole market thesis we're looking at. AIP, it's not just another dashboard or a place to, run AI models. Think of it more like an operating system. It takes all this different data, applies AI like large language models, and helps users make decisions and take actions.
So it connects the AI directly to what? Business operations.
Exactly. To the actual machinery of the business or the mission. It's about automating real work, not just spitting out reports. That's where the stickiness comes from. And this is why these results matter beyond just PLTR stock. This Q3 report really backs up this idea of AI apps at scale.
For a while, companies were spending loads and just building the models, the R&D part. Now it feels like the focus has really shifted to deployment speed, getting it working.
Okay, I get the shift from R&D to deployment, but why the big rush on speed right now? Why wasn't this the case, say, 18 months back? Well, I think it's the cost of waiting. In a competitive market, right, the first company to get an AI capability running effectively gets the advantage, whether that's supply chains or defense or marketing. Buyers just don't seem willing anymore to wait around for long custom build-outs. They're putting their money, it seems, on platforms that can go from pilot to production really fast. Weeks, maybe, not years.
Okay, pilot to production in weeks.
And that speed creates this pull-through effect. When a company decides to run AI at scale, on a platform like AIP, they immediately need the tech underneath it.
Like what?
Like GPU servers, cloud capacity, maybe specialized integration help. It forces spending on the actual hardware and services to support the software they just adopted. That's the core idea we're seeing validated here.
Okay, so platform speed drives demand for the underlying tech. Let's follow that logic. Who benefits? Who are the winners when this happens? We sort of group them into three categories. Let's start with category one, AI compute and server suppliers. We're talking about the companies making the essential hardware, right? Like NVIDIA, ticker NVDA, Supermicrocomputer, SMCI, and AMD, ticker AMD.
Exactly. The link is very direct. Palantir signs a big AIP deal. That customer almost instantly needs a steady supply of powerful GPU servers, AI-optimized systems. Palantir essentially becomes a sales driver for these specialized chips and systems. So AIP growth fuels demand for GPUs from NVDA and AMD and for the specialized server setups from companies like SMCI.
Does this demand hit all these hardware guys equally? Or does AIP need the absolute latest, greatest stuff? Could a customer maybe use older tech?
Well, generally, these modern AIP workloads, they're complex. They need fast processing for real-time decisions, so that tends to push demand towards the higher-end, newer GPUs. And companies like Supermicro, their whole focus is building servers optimized for AI density, cooling, all that. That becomes pretty essential when you need reliability and speed. You're not looking for the cheapest option. You want the one that works fast, keeps these suppliers busy.
Makes sense. Okay, category 2 winners, the hyperscale cloud platforms. The big players, Microsoft, MSFT, Amazon, AMZN, and Google, GOGL.
Right. While some AIP might run on-premise, a huge amount of this activity happens in the cloud. As companies really operationalize AI, running it constantly, their use of cloud services, compute, storage, data handling, networking, it just goes way up.
So more AIP usage equals more cloud bills.
Pretty much. And these cloud providers are often partners in the deployment. They provide the infrastructure AIP runs on top of. So every AIP expansion tends to mean more revenue for Microsoft Azure, Amazon AWS, or Google Cloud. It's a direct benefit.
Got it. And the third category in the winner's circle, defense and federal IT integrators. Companies like Leidos, LDAS, CCI, and L3Harris, LHX.
Yeah, this comes straight from Palantir's strong growth reported in the U.S. government sector. It's one thing to sell the platform, say, to the Pentagon. It's quite another to actually weave that platform into the existing, complex, often classified government systems. That final integration step, the architecture, security, network setup, that's where these integrators come in. They have the clearances, the long-term relationships.
So Palantir's government success, plus the general push for AI modernization in federal agencies, creates work for these firms.
That's the idea. It means ongoing contracts, collaboration opportunity. They become essential partners in getting these AI platforms operational within government.
Okay, so we have the beneficiaries laid out, but budgets aren't infinite. If one approach is winning, others might feel the squeeze. Let's flip it. Who's facing pressure from Palantir's strong showing?
Right, the other side of the coin. Validating the AI apps at scale idea also means identifying who's now under more competitive heat. First category, feeling pressure. Other AI platform challengers. Think companies like C3.ai, Ticker AI, UiPath, Path, or even Snowflake, SNOW in some contexts.
Why them specifically?
Because Palantir's execution, especially that commercial growth and the raised guidance, it just raises the bar for everyone else selling enterprise AI platforms. When potential customers see one platform getting implemented quickly and showing results, they might become less patient with platforms that seem slower or need more custom work. It makes the fight for budget and attention tougher for these competitors.
Right, that focus on speed and packaged solutions puts pressure on the traditional way of doing things too. Which brings us to category 2, custom build and legacy consulting. Firms like Accenture, ACN, and IBM.
Exactly. This is that classic tension. Custom built versus off the shelf, essentially. Historically, a big company wanting a sophisticated analytics system might hire a major consulting firm. They'd spend months, maybe years, designing and coding something totally bespoke.
But you're saying that model is less attractive now?
It seems that way. There appears to be a growing preference for these packaged platforms like AIP. They might not be 100% tailored, but they deploy fast. It's like choosing between ordering a custom suit that takes months versus buying a really good, ready-to-wear suit you can use tomorrow. That preference for speed can mean slower growth for integrators heavily reliant on those massive long-term custom projects. They need to adapt.
That's a clear analogy. Okay, final category under pressure. Standalone developer-led data stacks. You mentioned companies like MongoDB, MDB, and Elastic ESTC.
Yeah, this one's more about market consolidation, maybe at the edges. These are great tools, databases, search tools that developers often use to build internal data systems piece by piece.
Foundational building blocks.
Right. But when a company decides to standardize on a big end-to-end AI platform, one that handles everything from data intake to processing to model deployment, well, that big platform often includes capabilities that overlap with these standalone tools. If you buy the whole prepackaged system, you might spend less on the individual components you used to buy separately. So budgets for some of these specific point solutions could get squeezed as companies consolidate onto broader platforms.
Okay, that paints a pretty comprehensive picture based on the Palantir results. Strong numbers, especially that U.S. commercial acceleration. And it forces a conversation about valuation versus this proven demand for packaged AI platforms.
And I think that brings us to the key takeaway for you to think about. What we've talked through today really underscores how critical deployment velocity is right now. In this tech environment, it seems that the crucial question is, how fast can you get a solution out of testing and into real-world operational use where it actually does something? That speed seems to be what's really separating the players in the market today.
The clear focus on speed to value. Thanks for walking us through that analysis. And just a quick reminder for everyone listening, this discussion reflects analysis of market trends based on recent reporting. It is not financial advice. We're not recommending you buy or sell any stocks mentioned. The information is based on the opinions of the report's author that we reviewed. Thanks for joining us on Breaking News to Trading Moves.